Greetings to our viewers and subscribers on the DRS91 Forex trading, vlogging, affiliate marketing, and just about everything channel of Darian Ray Scott, the Honest Trader. I'm back. I've been out for at least a month. Yeah, so I'm back, everyone. Got a ton load of videos for you guys, as promised. Gonna be going into the smart money trading concepts, couple gold videos, more affiliate marketing videos, just about everything. Please hit that subscribe notification bell so you guys can keep up with all of the updates. Thank you to every single subscriber who has stayed subscribed to my channel. So without any further delay, what is this video about? I'm going to be doing a gold video for you guys today. It's about the market context of gold. This is going to open up your understanding to trading. This is a smart money concept type of trading. And also I'm going to show you guys the interesting correlation and why the euro price, the appreciation or depreciation of the euro price affects gold in general. So you guys need these little gems if you're going to be taking on gold trading full time. Remember, the Gold Rush group is open to everyone as long as you're serious about it. Link is in the description box below. Let's get started now. First and foremost, every single person thought that the price of gold started selling around this year. You are so wrong. Take a good look at the overall context of the market. This is market context. What is market context? It's the true bigger picture of what's taking place on the chart. Now, August 2020, we saw the sell-off start. Then 2021 came on the scene, and we saw for the first 3 months in the trading year, market price sold. And then for the April-May period, market price went up on a bull move. And then we saw overall correction during the period of June. Price then went. August came on the scene, didn't take out the low. Here we are right now, September. Now, many of you guys kept on buying, calling out the price that you're expecting the market price to just continue to push strongly towards the bullish side. I have to show you guys this. All right, let's go on the chart right now. Okay, Euro USD. Gold, right? Open high for the month of 2021. Let's get the highest price here. I'm going to start this off. Market context I'm giving you guys. All right. Same thing on Euro USD. Remember, the price of gold is affected by the appreciation and depreciation of the euro. Strong euro, look for gold prices to go up. Weak euro, look for gold prices to go down. Many persons have the Euro USD chart right next to them. It's a perfect confluence to use when you're understanding and looking at the overall market context of gold. It gives you a boost as to where price is going. Now take a look. Similar, right? The only thing about the EU is that the market price made a low around March, and so far March low has been taken out by August. So August give us the lowest era for the Euro USD at 1.16623. But for gold, which is a commodity, yeah, we have a currency and a commodity, the price made the low of, let's get the low for just March 1st, 161676.12. August went close, but August didn't break that low. But still, look at the sell-off that is taking place. It is these type of confluences we use in relation to the euro and overall what's going to happen to the price of gold that allows us as gold traders to have a better understanding of the bigger picture, saying it's going to continue to sell. Now, confirmation is key. So all I leading into the month of October is on 167.12. This is the year that market price has to break for us to say the price is going to continue to fall. Right now, we have the high for the year of 2021 being respected, and we also have the low. So we're kind of right there in the middle. So for many of you guys who are like, why is the price going up for a bit, then going back down? Let's get into the deeper matter. Let me show you guys this now. This is where things get interesting. Now, you have to mark out the zone of reaction. And that zone of reaction for us is 1834. Let me explain the significance of this era. The month of July, the month of August, and currently September failed to break out that era. That's one of your key areas or key levels on the chart that you have to pay close attention to. Because if that level is not taken out, you truly do not have any reason to support that the gold price is going to be heading to the 1850s or the, early 1900s. The context of the market, as I'm sure you guys are seeing, is still in fact telling us that the price is bearish. Now, July, August, and currently September didn't take out that level. But at the same time, going further down, we have a low that was made in August, 1676, and we also have the current structural zone right around here. The low for September. So this is the lowest area that market price made for the month of September. This is the current week we're in right now. We're wrapping up at this present moment. So 1737.58, that's the area that market price has to beat. Now, let's go a step further with this now. And at this point, many traders start to, highlight these zones with supply and demand areas and so on. I'm just going to be using technical lines for you guys at this present moment. Now, just going to do one here. Just quickly, just to the daily chart, just one. I want you guys to get the understanding of this and to really reinforce it home. That way, you don't find yourself following these signal groups that are going to be putting you in a warm spot. I see too many gold traders going off of signals and they're fighting the market. You don't want to be fighting the market, brothers and sisters, boys and girls. You want to ensure that you're in a position in which you understand the bigger picture. Now, these zones that we have, crucial markers. These are where you're going to get what you call your sniper entries in Forex. And for the 4-hour chart, structural wise, you have to mark out the current area of reaction as well. Then you start to go more in depth in the overall order flow concept. The order flow clearly shows that the price is selling. Let me give this area a different color. Notice my top down analysis is coming through perfectly. I'm working my way down. I'm highlighting all of my regions, watching which zones price has to break to confirm something to me, watching the lows, just about everything. So everything is matching out perfectly for me on the chart, and I'm still keeping abreast of the market context. So here I'm on the H1 chart. I saw the low. Let's get this fixed properly. 1737.85, that's the low that market price made on the 23rd around this region. Let's zoom in just a bit. This is Friday. Now take a look at this, guys, line chart. Tell me where you notice market price is going. Let's quickly change this to black. Tell me where you notice market price is going. Price currently didn't break that low, so we're getting a bit of a bullish inclination. But if you look closer, where is the market price going up into? It's not going up into areas where we can say, boy, it's a true break of structure. We haven't seen this zone being taken out. Let's quickly mark it. So what I'm doing, we haven't seen 1761 or 1760 to be more precise get taken out. So anything that is inside of this current period, as long as these highs and these lows are respected, I have no choice but to collect what I can and exit. Price is currently lingering in this area, ranging about, so to speak. But I have all my structural areas, zones of rejections, everything marked out. Now, I'm going to go far more in depth right now. I'm going to incorporate my starting block now. So, all of this is Monday. If you guys were following this up earlier, you would be in a far good position. The buy-off that we got earlier was truly a very immaculate buy-off on the chart. So, blue. Let's bowl up this zone to quickly show you guys how market price reacted around this area carefully. Okay, here we are right now. So open high for the 27th for the price of gold. We had an open high of, let's call it out, 1750.95. We had an open low of 1748.34. Notice how the price broke out of the open high, got a decent buy off. Price went into this area, this crucial zone around 1760. Didn't break it. So if you were looking to buy at this area, quite naturally you're late. Notice how the price lingered. First wave of sellers. So price went, respected it. We got the first wave of sellers. Price came down. Now right here, so if you're quite naturally selling here, you're at a bad spot. You look to the left. You went into a block, an imbalance area. So you went into an area of price liquidity. Price came back up. So these guys got stop hunted. Now stop hunts occur on practically every single asset, but watch out on gold. Just the sheer volume and the liquidity of this asset, you have to exercise a tad bit more extra caution with this. So price did a stop on, but notice it didn't even break the 1760 that the market price touched initially. Then we got what is called a second wave. Price entered into the starting block, pierced past it, but the low that the market price made on Friday's low was respected, yeah, and overall went into another imbalance area right around here. I'll have to cover those in our next lesson for you guys. But you guys seen the blueprint of how the price is reacting. Price came back up after setting that low for Monday, the 27th. Star price reacted around the starting block. Next move back up. Still nothing. So price went back down. So choppy look period, if I can word it like that. Choppy look period on the chart, but overall the order flow is still being maintained. Alright everyone? So that is exactly what's happening. So get this out of the way. So what we're looking for in the days to come for the price of gold, we're looking for buyers to be attracted due to the fact that the price has been respected. So once we see a clear break of this region, we're looking for market price to then proceed to go into another crucial starting block on the chart. So many persons have it at 1770. I have it around 1768. Could be wrong because we're expecting price to spike. But if we see market price overtake this area and then continues to push further, then it's going to be drawing out more buyers. Okay? Now, once these buyers are trapped in these extreme zones of exhaustion, buying exhaustion area, well, they're going to blame it on the news. The NFP is going to come, and more than likely, it's going to be the driving force that is going to correct the overall trend and send the price back down. But that's just a brief synopsis of the overall context of everything. So, once you go on your higher time frame, let's zoom out a bit. You see the context of what is facing you. So you start to realize there's going to be buy opportunities, but I don't want to be on the wrong side of the market for too long because price undoubtedly is going to correct eventually. So what's the bigger picture? The bigger picture is the low for the month of September being broken, and then the overall continuation of the market context is when 1676 is taken out, we're on our way. So from here to down here, 735 pip drop. Hope this assisted you somewhat. Thanks for watching this video. Stay tuned for the others. Peace out. God bless.